Okay, welcome back to another video, guys. So today I'll be showing you guys how to spot market structure, how to spot market structure shifts, and how to spot the higher time frame and lower time frame market structure, because that is a little different, and how to not get manipulated by it. Okay, so here you can see that we have bullish structure. Market is moving in an uptrend. And how do we tell that? Because price creates a high, a low, a higher high, a higher low, and then a higher high, and that continues on in a bullish market. That's bullish market structure. And the opposite is for bearish. A low, then a high, a lower low, and a lower high, and so on. That continues moving market in a bearish trend. So that is how you spot bullish market structure and bearish market structure. I'll show you guys an example on the actual chart. Pretty easy to tell, to be honest. Bullish, bearish, bullish. If that is too hard for you guys to tell the difference between bullish and bearish, what you guys can also do is go right here on the top. Your guys's will be set on candles. Switch it to line, and then you guys will be able to tell, okay, market is moving up. So bullish, bearish, market is moving down. But yeah, guys, that's how you spot the difference between bullish and bearish trends. One thing I do want to point out, right, is we are not trendline trading. We are not teaching you how to use trend lines to trade. Obviously, you guys will need other confluences stacked on top to figure out where to place an entry. But it is very important to understand the foundational movement of price action. Okay, now that you guys know how to spot bullish and bearish trends, I will now be able to show you guys how to use it on the higher time frame, see where price is going to lead to, and how to not get manipulated. Okay, so here on the 4-hour time frame, you guys can see, right? Obviously, bullish structure. Okay, and that's on the 4-hour time frame. So then you're going to say, okay, market's moving up. But if you did not go to the 4-hour time frame and check before looking for a trade, then you're going to be like, okay, wow, market is moving down in a very bearish trend. So then what are you going to do from there? Obviously, you think market is moving down and going to continue moving down. So what do? You enter a short. Okay, thinking market's going to continue moving down. And this is where a lot of people mess up because they didn't check the higher time frame. So then you enter the trade, and then boom, you get stopped out, you lose a whole bunch of money, now you're mad, right? Or upset. But this was very easily avoidable if you would have checked on the higher time frame. You would have seen the higher time frame is very bullish. So obviously market's going to continue going up. Here, I'll give you another example. Say you are swimming, right? And a current comes along. Are you guys going to swim with the current, or are you guys going to try to swim against the current? Most likely with the current, right? This, you got to see it like this. This is the current. You guys want to swim with the current, right? To continue up. And here, I'll give you guys another key thing to remember. You guys can write down. So the higher time frame holds higher power. I'm going to give you guys a little quiz, right? Say the higher time frame is bullish, right? But the lower time frame is bearish. What are you guys going to do? Short or long? You guys are most likely going to start looking for longs to continue that trend up on the higher time frame, because the higher time frame again holds more power. If you are fixated on the lower time frame, that is where most of the time you will be manipulated because you're not checking the higher time frame. Now, I will teach you guys market structure shifts. Market structure shift is when price is in a bullish trend and then switches to a bearish trend, right? That is a market structure shift. So how do you actually spot this? Quite simple, to be honest. So it's when you see this higher low, right? When you see this higher low, get swept and you get a hard body closure below this low, can confirm that you have a market structure shift. This indicates a change in trend, so it's shifting from bullish market to bearish market. And what I said earlier is a body closure candle. So when you get a market structure shift, right? When you're looking for a market structure shift, look for a hard body closure, right? For the candle to fully close below the higher low. That way you can confirm that you do have a market structure shift. And from there, you can start seeing a bearish market. So this is what it looks like from bullish to bearish. And this is what it will look like from bearish to bullish. So when you're bearish and then start swinging bullish, you look for a market structure shift. So that is when the lower high gets a full body closure above, confirming you have a market structure shift. From there, you can start seeing bullish market. Boom, pop quiz. All right, is this bullish or bearish market? Well, hopefully you guys got it right, but this is a bearish market because creating a high, a low, lower high, lower low, lower high, and so on. Okay, so this is an example of a market structure shift. So you have a bearish trend, right? Then you have a high, right? And what you want to see is price come in hard close above that high. So boom, we have a hard close above that high, confirming our market structure shift. So from here, we will start seeing a bullish trend. Boom. Then you saw that price swept this high, had a hard body close above it, and from there it confirmed your market structure shift and saw that price started trading higher. Market structure shift. Okay, here's another example, right? We are in a bullish trend. So then we see price has a high, a higher low, a high, a higher low, right? So what do we want to see? Price hard close beneath this low. What do we get? A hard close. And what does that confirm? That we have a market structure shift. So from here, we could start seeing bearish market. That is a market structure shift. See, and we continue going bearish. You can see we are in a bullish trend, right? Price comes and sweeps this low right here. Now, I have a question for you guys. Is this a market structure shift? No, it's not a market structure shift, because when you can confirm that it is a market structure shift, you have to wait for the body of the candle to close below like this, right? So this is not a market structure shift, this candle. This one is. This one confirms that you have a market structure shift, like I said, and then continue going bearish. So always remember that the wick does not mean that it's a market structure shift. If anything, that's a liquidity sweep, which you guys will learn about liquidity in the next video, most likely. So when looking for a market structure shift, you must wait for the candle to fully close so you can confirm your market structure shift, because a lot of the times people get faked out, which is this candle right here. You get faked out thinking market structure shifts can happen just by the wick of the candle, which is not true. You have to wait for it to hard close, like I've said many times in this video. Okay guys, here is what to watch out for. So here you can see that obviously we are in a bullish trend, right? Very, very bullish. Is this a market structure shift? If you answered no, then you are correct, because like I said many times, we have to hard close below it. So this is what's actually called a fake out, or you can also see it as a liquidity sweep. So we are going bullish, right? We have a fake out, and then what do you see? We continue going bullish, continuing that higher time frame trend. Watch out for these. These are called fake outs. So like I said, wait for a body closure to then confirm your market structure shift. If you're live trading in this candle, right, this candle is still being formed while you're trading, and you see it come down all the way down here, creating the wick. And then you're saying, okay, that's a market structure shift. I'm going to take that to short all of this, right? See, that market is starting to go bearish, but you don't wait for that candle confirmation to hard close below that low. Then you're going to get faked out thinking that market's going to start swinging bearish when really it's just confirming that it's going to go continue bullish because it swept some resting liquidity. Watch out for this. It's a fake out. Okay, now you know that the bodies and the wicks make a huge difference if it's either a liquidity sweep or a market structure shift. Well, that wraps it up for market structure. I hope this taught you guys something. I hope you guys now see the chart a lot better, a lot more clear, and I hope this helped. If you guys have any questions, text me in the Discord or go ahead and leave a comment and I will reply the fastest I can. Hope you guys have a great rest of your day, and I appreciate you guys for watching. Peace.